All right. So if you guys can let us know if you guys can hear us or not, we'll get this broadcast started. All right. Okay. I think we have a confirmation that everyone can hear us. All right. Can you guys hear us? All right. So I think the audio is good now. So let's go ahead and get started here, Leon.
All right.
All right. So what's up, guys? My name is Ty Zen. I'm broadcasting from Dallas at this moment. And with me today, we have the Honorable Grandmaster, legendary, world-renowned LeonFu.com, right? Say hello, Leon.
Hey, guys. Still here.
All right. So if you're new to this channel, Leon is known as the Oracle of Crypto because he's made some really, really excellent calls on some really good cryptocurrencies here, right? And we'll go along with that, you know. So in this video, guys, we want to talk about Bitcoin Cash, what it is. We're going to give you guys a brief history of what it is today and explain what it is, how it got started, how it got created. And then we want to talk about, more importantly, from an investor's perspective, how we need to view Bitcoin Cash, or at least how Leon and I and the rest of our team view Bitcoin Cash, okay? And the other baby Bitcoins that's about to come, okay? So before we get started, let's take a look at the Typhoon 30 cryptocurrency market index. It's up 2.54 points today, which is 1.76%. So if I guess the Typhoon index, since it came out in June, it's up. It started at 100 points, so it's up 44 points. So that's a gain of a growth of 44%, which is really good. I mean, it's always good when the market's going up. If we look at the Typhoon Bitcoin aggregate index, which includes the price, the market cap of Bitcoin Cash and Bitcoin. It's up 2.5 points since in the last 24 hours as well, right? And if we look at the Typhoon 30 altcoin market index, that is also up. It's up 0.03 points. It's at 62 points right now. So everything is up. Everything is back up. So, and this is something that Leon and I were discussing about, that the altcoin, you just really quick, this is about Bitcoin Cash, but really quick, can you explain to the audience what we discussed about why the altcoin market's going up right now and why there was a lag between the altcoin market going up versus Bitcoin?
Yeah. So Bitcoin's been on a tear the last month or so, let's call it, at the bottom, market bottom. And the majority of the new money, the gains, have been coming from Bitcoin and Bitcoin Cash. You know, you guys got to remember that most altcoins do not trade against fiat, do not trade against US dollars, do not trade against euros. The only coins that do are Bitcoin and Ethereum, the two big ones. Basically, if you want to buy, if you're starting any new money that comes in that's starting in fiat, has to go into Bitcoin or Ethereum. There's not really a liquid market between any of the other altcoins and fiat. So what we're always going to see is Bitcoin, when new money comes into the crypto markets, it's going to cause a move in Bitcoin. Primarily Bitcoin, but perhaps Ethereum, but I would say Bitcoin primarily, because that's where most of the liquidity is. That's where, if you have millions of dollars that you need to put into the crypto market, you're going to go buy Bitcoin first. You're not going to go buy, you know, Dash or Litecoin or any of these other ones down the list. You're going to have to go buy Bitcoin first. Maybe you can buy some Ethereum. So that's why there's going to be a lag. What we just saw, Bitcoin just double from 2,000 to 4,000, and that was against US dollars. So we're going to see, you know, what we're foreseeing is that somebody has a new pile of new Bitcoins that they just bought, and they're going to be looking to diversify into the altcoins. And we're going to start to see that rally happen, we believe, over the next several weeks. But there's always going to be a lag for that reason.
Okay, so now that we understand that, right, you mentioned about the topic of this video is what is Bitcoin Cash, and I just want to run through a quick summary or history of Bitcoin Cash for our audience, and then we can talk about, afterwards, we can talk about the investing side of Bitcoin Cash or an investor's perspective, right? So originally, Bitcoin was invented by Satoshi Nakamoto in January of 2009. And since then, it's been running along, and the software has been updated multiple times. But recently, in the last year or 2 years, there has been a contentious argument among all the people in the cryptocurrency, in the Bitcoin development community, okay, where they wanted to update the software in a certain way that includes an update called segregated witness, and it's called SegWit for short. And then there's a large portion of the community that did not want to update the software in that way. They wanted to update it in a different way, okay? So let's just call it, you know, one version of an update versus another version, okay? Version A versus version B, okay? So these two communities had a huge argument, and they disputed, and then finally on August 1st was like a hard date in which the updates were going to happen so that they can increase the capacity and the transaction speeds of the Bitcoin network, okay? Well, on August 1st, what happened was the update did happen, but one party wanted to update it this way, and then another party wanted to update it this way, okay? Now, who are in the people that are involved in those parties is not relevant in our perspective, from an investor's perspective, right? What we need to know is that two groups of people wanted to update it. Now, on the surface, it appears that they wanted to update it in this manner, and this other party wants to update it in this manner because they want to increase the transaction speeds of the Bitcoin network. But the reality is, underneath all that, underneath the surface, the reality of why these parties are fighting to update it in a specific way, in their way, is because they want to take control of the Bitcoin network. It's all about control. The party that does the update or responsible for updating it will be the party that ultimately has control of the Bitcoin network, okay? So that's what it is on the surface. There's all kinds of reasons, technological reasons, why one party wants to update it one way and another party wants to update it another way. But the reality underneath all the surface of that nonsense is that it's just a matter of who gets to control the Bitcoin network.
It's political, I think is the word.
Yeah. And you want to just recap real quick what we believe is the biggest flaw in Bitcoin?
Yeah. So on the surface, if you listen to the two groups, let's just call them Bitcoin Cash and Bitcoin Core, for the sake of this discussion, it's really about, yes, on the surface, if you're just an outsider and you are just looking at this, let's say you're new to cryptocurrencies and you just listen to what these two parties are saying, it sounds like it's a technical debate, right? It sounds like one wants bigger blocks and they want faster transactions, and then another group wants something called segregated witness, and they want 2 megabyte blocks, and they have different technical roadmaps. So if you're looking at this from somebody who's just coming into the cryptocurrency space, it seems like it's really just about technology, right? Because the discussions between the pros and cons are very technical. But what, for us, when we, as veterans now, I guess we could call ourselves veterans since we've been in cryptocurrencies for over 4 years now, the politics is what this is really about. It's not really about, is segregated witness better or is big blocks better? It's really about who is going to be in control of the future of Bitcoin. That's what it's really about. And all of these debates is these two groups trying to position themselves as the quote unquote to become the official version of Bitcoin. That's what the fork is really about in our view, in my view. It's really a political battle rather than a battle over technology, which is what, if you read Twitter's, that's what the debate's about. But is Bitcoin Core going to be remaining in control, or is Bitcoin Cash, the group that is leading Bitcoin Cash? It's a battle of control. And
okay, so since they couldn't decide, they went ahead, these parties forked, and each of them updated the software in their way. So now the community is to where there's a portion of the community that supports the Bitcoin Core, and the other one supports the Bitcoin Cash. Okay.
Yeah.
Now, the funny thing is that both parties own both coins.
Yes. Yes.
You have a choice.
That's right. If you owned any Bitcoins before Bitcoin forked, both parties own both coins. We all own both coins. If any Bitcoins you had before the August 1st fork, you now have a Bitcoin and a Bitcoin Cash. You have twice the number of Bitcoins. They have different values, but you currently have two coins when there was previously only one. And it remains to be seen as to which of these two parties will ultimately be in control of Bitcoin. And the market will tell us that. And clearly right now, with Bitcoin at 4,400 and Bitcoin Cash at 600 and change, right now the Bitcoin Core is still dominant. But who knows? I mean, there's a lot of people on both sides, and it remains to be seen as to who will ultimately win.
Okay, so can you talk about why, like some people have written off Bitcoin Cash as dead before it arrived, but
yeah, sure.
It's gone up to almost $1,000 per Bitcoin, and the market cap is over 10 billion. Right now, it's sitting around like $600-700 last time I checked, right? But why is it that people thought it was dead and now it's alive and doing well? And
well, I mean, look, just by the amount of support Bitcoin Cash had going into the fork was enough to tell us that it wasn't going to be dead, right? We had exchanges, big exchanges supporting it. We had major wallet that's announcing support, such as Ledger and Trezor and many other wallet makers coming out and supporting it, or at least allowing you to get your Bitcoin Cashes, right? Even if they didn't want to support it, they at least allowed you to go claim it by exporting your private keys. We had exchanges, big exchanges, all the major exchanges coming out, many major exchanges coming out and supporting it. So I don't know why people thought that it would have been dead on arrival, because it was one of the more highly watched, highly anticipated events of the year in cryptocurrencies. So why anyone would think it was going to be dead is, I don't know why some of us in the community thought that it was just like no one would care, because clearly everyone cared going into it, and people wanted their Bitcoin Cashes, right? People wanted to make sure that they got the Bitcoin Cashes that they owned. If this coin was worthless, why would everyone want it? Correct?
Okay, so this, I think now would be a good time for, because we have so many new people on our channel, I think it's important that we explain to them, Leon, that the value of a cryptocurrency, guys, comes from the community around that cryptocurrency, not from its technology. Okay,
That's true.
that's if all the people that don't understand how to make money from cryptocurrency investing, they focus on the technology. The people that know how to make the big money in cryptocurrency investing, guys, focus on the community around that. Okay, so if you want to make big money in cryptocurrencies and retire early, like we did, right? I would recommend that you guys focus on looking at the community behind a cryptocurrency. Okay, so you want to elaborate on that real quick?
Yeah. So the community.
Why is it it's not the technology? Because a lot of newbies that come into cryptocurrency investing, they focus on the technology. We made that mistake early on too.
Sure, we did too.
We did that mistake. Okay.
Yeah.
Back in 2013, 2014, we made that mistake. So go ahead and clarify it so that our audience does not make the same mistake that we did, focusing on the aspect of the component of a cryptocurrency that does not make you money.
Okay.
Let's focus on the component that does make you money.
The component that makes us money is how large the community gets around a cryptocurrency. Okay, because the idea of a currency is limited supply, right? That's if there was not a limit to supply, it would not be money, right? It would just be if there wasn't any scarcity, it would not be money. So as more people come in to use a currency, any kind of currency, the more valuable it becomes, given that if its supply remains constant, right? So, although technology is important, we don't mean that technology is not important. The technology is important, but where the value comes from people. Value does not come from things. I think that's one thing many people misconceive, that there are things that like this that have inherent value, physical thing.
Like gold, or like gold has value. Gold does not have value.
Gold is a metal. Exactly. The value comes from people, okay? Things have value because we as human beings give it value, okay? And it doesn't matter what it is. It could be even things like water, like this can of mineral water that I'm drinking. It's valuable to me because I put value on it for whatever reason. Now I value it because I'm drinking it and it serves a purpose for me. But as long as I put value on it, it really doesn't matter what this is. As long as another human being puts value on something, it has value, because value comes from people. Value does not come from things or there's no inherent value of anything, right? The only thing inherent is the value that we as human beings give it.
It's like when people say that the intrinsic value of gold or silver, right? And I think that's kind of a misnomer, because intrinsic means inside, that the gold has value. The gold itself has value because we give it value. The cryptocurrencies have value because humans give it value, right? And it's not the technology. That's the main thing that we want you guys to understand. The cryptocurrencies that have technology but has no value. Give some examples so that people know what we're talking about.
Yeah. So a good example is like Dogecoin. That's our favorite. We love Dogecoin, right? Yeah. It has value just because of the community. That it has no technology. It was simply one of these copycat coins. It was started as a joke by the founder of Dogecoin himself, who said, "I'm doing this just to make fun of all the altcoins that were coming out." Time, right? And he was doing this just for fun, just to poke fun at all these copycat coins that were coming out in 2012 and 2013. But the community rallied behind that. They thought that, hey, that's funny. Let me go buy some, right? And all of a sudden, you have a coin that is still in the top 20, 30, 40. It's still up there on the first page. It's always been there. It will probably always be there, in my opinion. somewhere in the middle of the first page on CoinMarketCap, because the community gives it value, and no matter what we say or anyone else says, it has value because people choose to give it value. And the reasons why they do it, as long as they continue to do it, is really irrelevant for it whether or not it should have any value. It has value because people give it value. And you can apply the same thing with Bitcoin Cash, that you look at the community, right? And if you see so much support from the community, from the miners, from the exchanges, from the wallet manufacturers, from the people talking about it, right? Just from the Twitter feeds and all the talk about whether or not it has any value, well, guess what? It's going to have value because there's just too much community around it for it not to. Because once again, the value comes from people, not the technology. Yeah.
Yeah. Hey, talk about another example, the Litecoin example with Segwit, right? And,
yeah.
And the particle example with confidential transactions. So these confidential transactions to make transactions private and Segwit are technologies that Bitcoin invented.
Yes, yes. Well, actually, I'm sorry. CT, I think, was the first time I heard of it. Well, I think it was from Monero. I'm not sure. I don't think Bitcoin invented confidential transactions, but the Bitcoin developers definitely invented Segwit, right? That was presented by a Bitcoin core dev. That was made by a Bitcoin dev. And guess what? Like Litecoin took it up, and a bunch of coins just copied it, right? I mean, technology is, in and of itself, doesn't have value, okay? It's very easy for someone to come along and copy technology, okay? And it will be copied. If it's a good idea, guess what? People are going to copy it. And so that's not really where the value comes from, especially from us as investors. It comes from whether or not a cryptocurrency can grow its community. Now, one way it can grow its community is by incorporating technology, right? Like, for example, when Litecoin became very obvious Litecoin was going to adopt segregated witness, the price shot up. It doubled and tripled and quadrupled ahead of that, because people were saying, hey, look, Litecoin is going to adopt this new technology that Bitcoin doesn't have, that was invented by Bitcoin devs, but because of the political turmoil that's going on in Bitcoin, Litecoin's going to go and take it and run with it. And the price shot up but it didn't shoot up because of segregated witness. It shot up because it grew its community, because the new technology drew more people in to the Litecoin community, therefore making Litecoin more valuable. But I mean, segregated witness is kind of like could be the reason why they came, but the reason Litecoin went up is because they increased their community size. Now, how a coin increases their community size, if regardless of what reason more people come to that project, it's going to go up in value, right? So that's really where we need to focus on as investors. We need to focus on how is the community growing for this project, not just looking at technology in and of itself, because technology by itself without the community is worth nothing, because someone else, another project can simply come along and copy it, and boom, they have that technology too. But guess what? They have a stronger community, right? So that's really something that we need to be paying more attention to. I think there's too much emphasis on technology and not enough emphasis on the community that's around the cryptocurrency.
Now, there's going to be a lot of people, there's going to be a lot of Bitcoin maximalists. The Bitcoin maximalists are the die-hard fans of Bitcoin. They don't believe in any other cryptocurrency except for Bitcoin, and they don't believe that any other cryptocurrency should exist except for Bitcoin. So my question to you is this, right, is that how do you see, what is the evidence that there is potential for Bitcoin Cash? Let's talk about the difficulty, the hash rate, and things like that, and what you were explaining to me offline about the EDA.
Okay, so
let's talk about the facts that are there, not opinions, but the facts. Cash and why it has. Where are the facts that Bitcoin Cash has a community? You mentioned about the exchanges. You mentioned about the people that are interested in it. But let's talk about hard numbers that no one can deny.
Okay, well, the most obvious number is the trading volume and the price, right? Nobody can deny that, right? Now, there's massive trading volume. Hundreds of millions to billions are traded every day between Bitcoin and Bitcoin Cash.
Yeah.
So, I don't believe, people are saying it's pump, but I don't believe there is a single party, even if there were, it really doesn't matter, that is able to generate that much trading volume just by themselves. There's definitely interest, but even if we ignore all that, we see people trying to get their Bitcoin Cashes. We see people trading it, like a lot of the chat groups and the Slack groups I am part of. All they do is trade Bitcoin Cash, right? And a lot of miners, the hashing power, that's real. There's about 10% of the hashing. Well, right now, there's a website called fork.lol that is tracking the development between Bitcoin Cash and Bitcoin, or the relationships.
Yeah, and just real quick too, so the audience can, if they want to follow us, they can go to fork, like fork and spoon, fork, and then .lol, laugh out loud. So that's a top level domain now, LOL.
Yeah.
So that way we make sure they go to the correct website, not to a
yeah. So this is an interesting website because it tracks a lot of the statistics, and one of the things it tracks I like is the POW, which stands for proof of work. This is the work that miners are doing to mine Bitcoin Cashes versus Bitcoin, right? Because as a miner, you have a choice. You can mine Bitcoins or you can mine Bitcoin Cashes. And as I'm looking at this, the split is over the last 3 hours is 55 to 45, roughly. And that means Bitcoin Cash is...
Hey, real quick, explain to them where you're looking at so that when they look at the website, they know what you're looking at.
All right, so if you click on the menu, there's the top is there's reward, blocks, TX, and POW. If you click on POW and then you click on hash rate, you can see the actual hashing. Now, hash rates are real resources. These are like miners are spending money. They're computing
like hundreds of millions of dollars, like millions.
Yes,
this is not like you spend $2 or $3 here. This is millions of dollars that's being deployed to process Bitcoin transactions.
Yeah, the Bitcoin transactions, and there's a real battle right now between Bitcoin and Bitcoin Cash for the miners' hashing power. Right now, it's split about 55 to 45. Now, it's very volatile. Miners are profit-driven. They will point their computing power at whichever coin makes them more money, right? But we know it has value because miners, if miners weren't able to, they're spending real resources to mine Bitcoin Cashes, namely their electricity and their computing power. And if they couldn't get paid for that, they wouldn't be mining it because they're a for-profit business is what they're doing, right? I mean, they're not mining for charity. They're mining to make money. And therefore, that's one evidence that Bitcoin Cash has a real community behind it. So, going into the fork, I always knew Bitcoin Cash was going to survive. Now, I didn't know, was it going to come out at 1,000 or 300? The market will figure all that out. But, the bigger point is that there is going to be more of these forks coming in the future. Because every time there's a contention, every time a portion of the Bitcoin community comes up with a new idea that is not compatible with the old Bitcoin, they can get enough of the community behind it, they're going to come out with a fork. So that's the situation. Now, one thing I wanted to go over that is a potential weakness of Bitcoin is the difficulty, right? Now, Bitcoin in its entire history has never had to deal with fluctuating hash rates from the mining community. The mining people, the number of miners mining Bitcoin has always been steady or increasing. It's never had to deal with losing 50% or 80% of its hash rate. So Bitcoin does not have any ability to rapidly adjust down its difficulty.
Okay, so just real quick, I want to interject real quick, Leon, in case someone's new to the channel and they don't know what the difficulty means. Okay, so the way that Bitcoin works is that every 10 minutes it finds a new block. Okay, so let's just say if Leon and I cranked up our computers and we started processing Bitcoins, right? What happens is one of us will find the blocks every 10 minutes, okay, because the network is set up so that, you know, randomly one of us will find the next 10 blocks, or the next block in 10 minutes, right? What happens is that when more people get added to the Bitcoin network, right, the more people that get added, the faster the blocks people will find.
Miners that bring in hashing power, yes.
Yeah, because there's more computing power to find the answer to process the blocks, right? So the way that Bitcoin works is that they have an algorithm called a difficulty algorithm, where if the more computers are being added to the Bitcoin network, the algorithm makes it so it's more difficult for people to find the next block, okay? And then as it grows and grows, the difficulty keeps going up and up. And so that's what Leon means, is that so far in the history of Bitcoin, since it's come out, the hash rate, which is the amount of computing power that's being added to the network, has been on a steady incline. It has never been on a decline, okay? So now go ahead and continue explaining
So the difficulty is retargeted, what they call retargeted every 2015, I think, or let's just say every 2,000 blocks. So every 2,000 or so blocks, the algorithm looks at, did it take on average more than 10 minutes or less than 10 minutes? If it took more than 10 minutes, we make it easier. If it took less than 10 minutes, we make it harder, right? That's part of the source code, right?
And when you say we, you're talking about the Bitcoin network.
The network, yes.
People, it's the network. It's
the software that it's in the Bitcoin source code. It's in the code that Satoshi Nakamoto originally wrote, was to adjust the difficulty level based on the last every 2,000 blocks, based on how long it took each block. So if, let's say let's say we were having 5-minute blocks on average over the last 2,000 blocks because more miners were coming in and adding their computing power, well, the difficulty would readjust upward, right? Now, if it took longer than 10 minutes, let's say it took 20 minutes, for the last 2,000 blocks, then we would have to make it easier, right? So that's the algorithm. Now, the problem with this is that if, let's say, all the miners leave, now altcoins have had to deal with this from the very beginning, right? Because miners jump between altcoins. They mine whichever coin is profitable at the given moment. So, for example, a coin might pump. It becomes, all of a sudden, it becomes very profitable to mine because the difficulty is still low and the price is high. So the miners will make a lot of money. They will add all their hashing power to that coin, and then when the coin readjusts to a higher difficulty level, it then is not, the blockchain freezes, because when the miners leave, let's say the coin crashes, it's a pump and dump. This happens with a lot of coins that get pumped and then dumped. The price goes back down, all the miners leave, but the difficulty is still this high, and the chain can't advance to readjust the difficulty. So the coin gets stuck, right? Because none of the miners are willing to mine it anymore, because they're not going to go mine a coin at a loss. The price isn't high enough anymore to keep mining that coin profitably. So Bitcoin has never had that situation happen. So there's no way, if, let's say, 90% of the miners decide that they don't want to mine Bitcoin, they want to mine Bitcoin Cash, then it will, the chain can't advance 2,000 blocks to readjust the difficulty, and it could potentially get stuck, right? Now, Bitcoin Cash does have that. It does have a way to readjust the difficulty down. Like it looks at the last 6 blocks, and if the average was, if there hasn't been a new block over the, let's say, the next, several hours, then the difficulty gets automatically readjusted down. Okay, and this is something that is part of the consensus algorithm, that Bitcoin can't add this without a hard fork, right? I mean, in order for us to agree that that we're going to use a new way to adjust the difficulty, there's no way to do that as a soft fork or anything. That has to be a hard fork. Now, why am I going into this? Is because if, let's say, for some reason, Bitcoin Cash runs to 2 or 3 or 4,000. Let's say Bitcoin Cash exceeds the price of Bitcoin, and the miners just stop mining Bitcoin. They go mine Bitcoin Cash, or they go mine one of these baby Bitcoins, right? Then I could potentially see where the Bitcoin dies that way, and Bitcoin Cash takes over, because now it doesn't have enough hashing power to find the next block to advance the 2,000 blocks to readjust the difficulty level back down again. So the coin gets stuck, for lack of a better word, okay? Because there's no way to, it doesn't have any way to readjust it downward. Now, what's happening right now between Bitcoin Cash and Bitcoin is we are seeing wildly fluctuating hash rates. The miners are rushing to Bitcoin Cash when it becomes more profitable to mine, and then they generate like up to 30 blocks an hour and make a whole bunch of coins, but then the difficulty readjusts higher. It no longer becomes profitable to mine, and then they repoint everything back to Bitcoin and mine Bitcoin, because the price of Bitcoin is at 4,400, the price of Bitcoin Cash is at 600. So miners right now, what we're seeing is they're constantly going back and forth, right? But then once they don't mine, once they move to Bitcoin, the difficulty drops on Bitcoin Cash, because it does have an exponential difficulty adjustment, what I'm calling an EDA, right? There's a way to rapidly adjust the difficulty on Bitcoin Cash downward. Then all of a sudden, now Bitcoin Cash becomes more profitable for a miner to mine, and all the hashing power, moves back. So we're going to see this back and forth between Bitcoin and Bitcoin Cash, for a while, where we're going to see wildly fluctuating hash rates. Now, I point this out is because that could be, I see that as a risk to Bitcoin, like the Bitcoin Core protocol, because if another baby Bitcoin gains traction and, say, surpasses in value the original Bitcoin, then why would a miner go, the miners would leave and go mine this baby Bitcoin, and then the chain could potentially grind to a halt, especially if the value drops. If the value drops too fast, or if the hashing power drops too quickly, then we could get a situation where the blockchain just stops and doesn't move anymore. It gets stuck. So that's one risk that, as an investor, that I'm watching the hash rates closely and the price of Bitcoin Cash because of that reason.
Okay. So from an investor's perspective, right? What we need to do, like you said, is keep an eye on it, right? And so to sum up what you're saying is that if all the miners on Bitcoin jump over to Bitcoin Cash before the 2,000 something blocks are created, right? That can potentially cause Bitcoin to be stuck.
Yes, it could potentially, where we don't see another block come out because the difficulty is too high relative to the amount of miners that are mining Bitcoin, right? And there's no way to readjust that difficulty. There's no consensus algorithm, and there's also no governance process in the community to readjust that difficulty back down. So that I'm not saying this will happen. I'm just pointing this out as a potential risk that has been in the back of my mind.
Yeah, and it's worth keeping an eye on, And you and I, we have a firm belief that you know, we really need to pay attention to it whenever the Bitcoin maximalists say that it's no good. Because they have a very good track record of being on the wrong side of price.
Yes, they have a very good, yes, if you just do what the maximalists say not to do, it seems like they're really good at that, you know?
Yeah.
You'll make a lot of, yeah.
Yeah. So, okay. So anything else about Bitcoin Cash that investors need to know about or pay attention to that's important?
Like I said, it's a development that is worth watching. It's a development that, once again, it's about the community. It's about can they get traction? Right now, they're in the minority. I think they're led by Roger Ver, is one of the main players in it. But if they start getting, you know, one of the things that people don't realize is Bitcoin is centralized right now. It's centralized by a few people, a few very large miners in China. And if a few of them decide to flip and get behind, say, Bitcoin Cash or one of these other baby Bitcoins that are coming in the future, you know, it'll be very interesting to see how that plays out. You know, it'll be very interesting to see. People say that Bitcoin is decentralized and all that, and it's not. It's in control by a relatively small group of people.
Yeah, and that's something that people don't realize, you know, and if you're not clear or don't have a full understanding of this, I would highly recommend you search for a video called Noses, Not Nodes by James D'Angelo. And he has a very good video, like a 10-minute video, where he explains why Bitcoin is not decentralized like everyone thinks it is. You know, it's all controlled by, the majority of it is controlled by a handful of miners in China. Regardless if you see 5,000 or 6,000 nodes that's listed on Bitcoin, it's not how many nodes you have, it's how many noses behind those nodes that are controlling it. And right now we have a very, very tiny number of noses that are controlling all the Bitcoin nodes. And because they are anonymous, there's no way for us to verify that they're not the same person, okay? So, and like you said, you know, if they just decide one day to flip the switch and switch sides and point all their computer power towards Bitcoin Cash, then they do have the ability to kill Bitcoin. Now, we keep saying that Bitcoin's biggest flaw is that it does not have a governance process, and a lot of the Bitcoin maximalists, they think that we are saying that the government needs to be involved in Bitcoin, and that is not true at all. What we are saying is that there's no final decision-making process to help Bitcoin update its software, right? And a lot of the Bitcoin maximalists are saying that that is a feature and not a flaw in Bitcoin. Well, what are your thoughts on that?
I think it's eventually that's where Bitcoin hits its limit.
Mm-hmm.
Now keep us on. We are not saying Bitcoin is dead. Okay, Bitcoin is not going to die. And in fact, the whole point of cryptocurrencies is that they can't die. Yeah. I mean, even coins that were outright scams don't die.
Cannot die.
They still can't die. There's some guy mining it somewhere, and the blocks just keep coming out, right? So Bitcoin is not dead. Bitcoin will never die. In fact, even a scam coin can't die, right? So that's about. But what we're saying is that, you know, the governance issue will limit how big Bitcoin will get. Will it get to $1 trillion? Will it get to 100,000? Will it get to $1 million of Bitcoin? Will it get to $5 million of Bitcoin? Right? And that's a governance process, right? That's not how good the technology is. That's not you know, anything to do with with software or with code. That has to do with people. Right? And it has to do with the community. How large can the community scale? That's what's going to limit Bitcoin and all the other cryptocurrencies as to how big they get. I mean, you look at let's say countries, right, or empires, right? How big can an empire get, right? How big can a country get? It has nothing to do. It doesn't have much to do with like how strong their military is or how many land they can conquer. It's really about their governance process. Is how large can they scale their governance process before it hits its limit. And that's the same. That's going to be true with Bitcoin and Ethereum and all these other coins. It's how well can they govern themselves? How well can they bring new people into the community and keep the community together versus what just happened to, say, Bitcoin Cash. Because of their lack of governance, a group of people decided to break off, and now they created $10 billion of market cap that is no longer part of Bitcoin, right? It's part of Bitcoin Cash, right? And it could have been part of Bitcoin if it had a better governance process. But because it doesn't, it went to Bitcoin Cash. And that's going to continue to happen because Bitcoin has no governance whatsoever. So every time somebody decides that they don't like something and they can get enough of a community together, it's going to fork again. And it's going to fork multiple times every time that happens. Because there's no way to resolve differences within the community themselves, but just forking, right? So eventually there are projects in the crypto space that are trying to figure this out. I named several of them. I'm invested in several of them. Things like Decred, things like Tezos, things like even Dash is trying to do that. And I will say that if any cryptocurrency wants to grow beyond a certain size, like if they want to get beyond 30 billion, 40 billion, 50 billion in market cap, they're going to have to figure this out. I'm not saying I have the solution. I don't. I'm not a political science major or anything like that. But this is a problem that all cryptocurrencies will eventually run into when they get to a certain size, when they become a major cryptocurrency, like 10, 20, 30, 40 billion dollars or bigger. Governance is something that they are going to have to deal with. Yeah. Okay, so before we wrap up this episode here, if you guys have any questions pertaining to Bitcoin Cash, just go ahead and type it in the chat box, and Leon and I will spend a few minutes to answer for you guys. All right. Let's go down the list here real quick, Leon. So make sure that you guys keep the questions pertaining to Bitcoin Cash on this particular episode, guys. So if Bitcoin's Nike 1007 asks, so if Bitcoin does slow down, will it be the base of cryptocurrencies? I'm not sure what that means. I think he means, will other coins still trade against Bitcoin, right?
Okay.
And that will be if that happens, that will be a real crisis in Bitcoin, because and it's already a crisis, because right now we have people who are not getting their transactions confirmed for hours or even days. If we ever get into a situation where Bitcoin goes into this death spiral, let's call it, where all the miners leave suddenly and the chain gets stuck, but it can advance, that's going to be I think Bitcoin will need to do a hard fork in order to survive if that happens. And will the community rally behind that? That's hard to say. I mean, how hard it was for Bitcoin to do the SegWit, just to even do a soft fork, that's been really hard, right? So if it got to the point where Bitcoin had to hard fork to bring the difficulty down, because the hashing power had left, yeah, that will be it'll be really interesting to see what happens.
Okay, so John Lott now asks, philosophically speaking, do you think Bitcoin or Bitcoin Cash is closer to the white paper? Any thoughts on that?
Well, I personally, I've read the white paper several times, and the very first paragraph says a peer-to-peer cash system, transfer payment system, right? That's in the Bitcoin white paper. And to be honest, in my opinion, I think Bitcoin, as it stands today, the original Bitcoin core, it's no longer an electronic cash. The word cash implies that I can pay you to buy a piece of coffee with it, right? I can use it the way I would use real cash, right? Physical cash.
Oh,
and Bitcoin.
I want to add this so that everyone knows. In 2012, 2013, when Leon and I got into Bitcoin, many of you guys know that I put my life savings into Bitcoin at that time, right? Leon was the one who helped me buy my first Bitcoin. At that time, I put my life savings into it is because when Leon showed me what Bitcoin did, I saw it clear and settle instantly. I mean, like when he sent it to me, it was in my wallet, and by the time he told me that it was cleared and settled, I could send it back out again. And the cost of sending it, I don't even remember how much it cost because it was almost free. Okay?
Yeah. And the transactions were free. Yeah.
The transactions were free. We saw, I think at that time, there was like a $150 million transaction that went through the network for 5 cents. Just a few days ago, I sent a transaction with a few Bitcoins, and it cost me $10.68.
Yeah.
If I saw that the Bitcoin transactions cost $10.68, I would have never put my life savings into it.
Yeah.
And it took hours to confirm.
Yeah.
Matter of fact, there's been times now where Leon and I, in order to transfer payments to other people, we've had to convert it, Bitcoins to Ethereum or even to Litecoin, and send it because it cleared faster.
Yeah, or it was just not worth paying somebody $100 if the fee is $10, right? I mean, it's not. It makes no sense to do that. That's worse than Visa.
Because the fees are so high now in Bitcoin that it makes it like the majority of the features that Bitcoin has is now gone.
Yes.
We have to be prepared for that, guys. As an investor, we have to be prepared. Somebody asked if we prefer Bitcoin or Bitcoin Cash better. We don't have a bias for either one. We're investors. Our goal is to make money from investing in cryptocurrencies. We are not here to argue or fight over which technology is better.
Yeah. Getting back to the original question, the word cash implies that I can pay you with zero cost, right? Like cash is like the cash in my wallet. I can give it to you and it costs me nothing, right? There's no middleman in between our transaction, right? There's no cost. I can hand you over $100 bill and it doesn't cost you or I anything for me to pay you or you to receive it. And that's no longer the case anymore with the way Bitcoin stands today.
Yeah, so, with Bitcoin with cash, when you give me $100 in cash, no one knows that you gave it to me except for you and I.
Yeah, and it costs us nothing.
100% private transaction. Whereas Bitcoin, we know for a fact that it's not a private transaction. It's pseudonymous. We just don't know who the sender is, but we can figure it out eventually because that's how they found out where the Bitcoins that were stolen from Mt. Gox, how it ended up at BTCE, at the exchange called BTCE, because it's not as private as everybody thought it was.
Yeah, sure. But even that part, Bitcoin has never been private or anonymous, but it was pretty close to free when we first got into it. It was pretty close to not being able to pay you like we use PayPal and not cost anything, and that's just no longer the case. So I think philosophically, Bitcoin Cash is closer to the original vision of the white paper, because I think the view of Bitcoin Core is being able to push all these small transactions through something they call the Lightning Network or something with segregated witness. And I'm not convinced that that's what Satoshi Nakamoto intended when he created Bitcoin. That's something that that's just my opinion, though. Yeah.
Yeah. So that's all the questions I see so far pertaining to Bitcoin Cash. If you guys like these types of videos, right, give us a thumbs up when Leon and I have these types of discussions. If you guys don't like it, give it a thumbs down, right? Then let us know. So that's all we have today about Bitcoin Cash.
I got one here.
So thanks for following us. If you guys want to learn more, follow us at www.cryptocurrency.market/newsletter, and you can follow us there. And then this will conclude this broadcast, and we will see you guys in a future episode. Okay.
See you guys.
All right, guys.